Good evening, everyone. Welcome to this AMCA webinar on corporate tax. Yeah, I would like to introduce myself. My name is Felci Sebastian. I'm working as a client engagement coordinator in AE, and along with me, Mr. Mohammed Shabazz, the CEO of this company, is also available. And I'd like to introduce Ms. Manur, the compliance auditor at AMCA Audit Company. Before going to this, I'd like to explain about our company, AMCA Audit and Business Advisors, DMCC. This is a company which was established in 2010, and we have our office in JIT, and we are offering a wide range of services starting from auditing and assurance, bookkeeping and accounting, advisory services, business setup and liquidation. And this webinar is a continuation to the earlier webinar which was conducted last week. Last week we had a corporate tax webinar on qualifying income, where we had a lot of questions and answers which we couldn't address in a short 1 hour session. So we have planned to conduct a separate one, and here all of your questions will be addressed over here. And the webinar, we like to explain the process on this. The first part of will be like a full presentation of the question and answers, which was already received from our end. And next, this session will be open to the participants, wherein they can shoot out your questions here. In the meantime, if you have any queries, you can just put it in the chat box. We can get addressed at the end of the session. And the first question was, what is the basis to judge whether the company has maintained adequate substance in the state? That's for a qualifying free zone person. In this, first, the company shall undertake core income generating activities in a free zone and shall have adequate assets, an adequate number of employees, an adequate amount of operating expenses. In case if any of the activities are outsourced, the qualifying free zone person should have adequate supervision of the outsourced activities. I will move on to the next slide. And the second question here is, does free zone income from sale of goods where the goods did not go through UAE, that is from purchase from outside UAE and sold to customers outside UAE, comes under qualifying income? In this case, it is subjectable to corporate tax because it's an income derived from non-qualifying activities, and hence it will be taxed. For example, as per Article 2K, distribution of goods or materials must be in or from designated zone. And in this case, the goods are neither distributed in or from the DZ, and hence not a qualifying activity. And all the free zone are deemed to be considered as mainland entities if they fail to meet any of the criteria of a qualifying free zone person. Even if the company meets the definition of a qualifying free zone person, still this transaction alone, particular transaction on its own, doesn't fall under the definition of qualifying activity. So it is subjectable to corporate tax. And the next question, actually there we had some 3 questions wherein it's a kind of similar situation and the answer is also the same. So I just read out all 3 questions to you. First question was like, please let us know the classification of commodity or goods trading income earned from outside the UAE as qualifying or non-qualifying income. And the next question was, if a free zone company has 100% export of food items, will it come under corporate tax? Only invoices issued from DMCC, whereas the goods are delivered from port to port. And the other question was, company is a free zone entity and all customers of that company are located outside UAE, and the company is sourcing paints, and that paints are from UAE mainland, and they are supplying to ships, vessels at different UAE ports. And this goods neither come from inside free zone or nor go outside at different UAE ports. In summary, all our income are generated from permanent establishments located outside UAE. Does this activity classify as qualifying activity or income? The transactions with non-free zone person must be from qualified activities and not from excluding activities. I would like to explain on what is a qualifying activities. For example, manufacturing and processing of goods or materials, and regulated reinsurance and fund or wealth management, and financing services to related parties. These are all considered as qualifying activities. Whereas in excluded activities like ownership or exploitation of intellectual property assets, or ownership of exploitation of immovable property, and transactions with natural persons, these are all considered as excluded activities. And as per Article 2K, the qualifying activities will be distribution of goods or materials in or from designated zone to a customer that resells such goods or materials. So if this condition is not met, the income will be non-qualifying. However, we can do a de minimis test and then it can be treated as a qualifying income. And what is a non-qualifying revenue? Please give example. This was the one which was given there. For this, we have to do a calculation. A calculation of non-qualifying revenue will include excluded activities and activities that are not qualifying activities, where we have explained now, where the other party to the transaction is a non-free zone person with exception of certain income. For in this case, however, it must not include certain immovable property revenue. For example, revenue from sale of goods to natural persons, rental income from residential property in a free zone. And next question was, is income with other free zones must be same free zone or can be different? For example, DMCC to DMCC only, or can be DMCC to JAFSA? The answer is any free zone. And the next question, explain the income attributable to immovable property. Immovable property is nothing but a normal real estate or residential house or warehouse or manufacturing unit or factory. These are all considered as immovable property. And some of the incomes which is attributable to immovable property, we are categorized in three here. One is either for income earned from a commercial property from a non-free zone person, and income earned from any, in the first condition, it will be taxable because it's from a non-free zone person. And there's a second condition, income earned from any non-commercial property within UAE. This is also be taxable. And the third condition, income earned from commercial property within a free zone. This is exempted from tax and it's 0%. Next question is, does income from immovable property includes income from warehousing services? And for the answer for this question is yes, because warehousing services it is doing for a business activity alone. So this immovable property income, it gets classified. It gets classified as an income from immovable property. And the other question was, we are holding company and we have a residential apartment for rent in UAE. Is it subject to corporate tax at what rate? For this condition, it is subjectable to tax because it's income earned from a non-commercial property since it's a residential apartment. Whereas, and here I would like to tell you the two conditions here. Income attributable to immovable property is taxable in any of the following scenarios. That is, transaction with non-free zone in respect of the commercial property, and transaction with any person in respect of the immovable property that is not a commercial property. So this question comes under the condition B. So it is subjectable to tax. De minimis requirement is only for other income to be included in qualifying income, or is it required to be a qualifying free zone person as well? This will be a qualifying free zone person. And the next question, what is the treatment of dividend, bonds, and interest received from listed companies outside UAE received by a free zone company? Is it exempt or taxable? On a general basis, dividend income can be eligible for participation exemption. We need to check the agreed terms. Like if there's an investment in foreign judicial person, but we need to check the agreement terms if it is an actual investment or it is an interest received from foreign company. For checking only about interest income, we need to calculate the net interest also. So further information is required on proper assessment of this condition. And the next question, free zone person means designated free zone or all free zone? The answer is all free zone. And the providing aircraft cleaning services in the airport free zone a qualifying activity? No, only financing and leasing of aircraft are qualifying activities. And the next question, is foreign exchange gain a non-taxable income for payments received from customers? This one, foreign gain or loss, if it is realized only, then it will be allowable income for CT purpose. In here, we have to check whether it's realized, and then it is allowable income for CT purpose. And the next question, what are the provisions for offshore companies? Under the corporate tax law, a judicial person is considered as a non-resident only if it is incorporated in a foreign country and is effectively managed and controlled outside the UAE. A natural person is considered a non-resident for UAE's corporate tax purposes if he or she is not engaged in a taxable business or business activity in the UAE. And non-resident persons will only be subject to UAE corporate tax on income from their permanent establishment in the UAE or income sourced in the UAE. The next one is how to treat income from exporting services to outside the country from a non-designated free zone. This income will be considered as a non-qualifying income and will be taxed as per available information as from the authority. And income from foreign permanent establishment is exempt at one end, and under qualifying free zone, it is taxable at 9%. But here clearly law states that a resident person can make an election to not take into account the income and associated expenditure of its foreign permanent establishments in determining its taxable income. So participation exemption is different. So qualifying free zone person only excludes income from the foreign permanent establishment to notify that cannot be accessed for qualifying free zone person at all. And next question, does commission or brokerage income for a free zone company to another free zone company comes under a corporate tax of 9%? And the answer is yes. The transactions with the related parties from June 2023 will be considered to see if they are complying with transfer pricing policy or regulation. If I have applied for CT registration, but I'm wondering what if the existing transactions with the related parties are not at arm's length, from which date I should make sure that the transactions with our related parties are at arm's length, just in case they are not currently. Transfer pricing is nothing but the rules we apply for the company's transaction with a related party and connected person, which has to be done on arm's length terms. And so in this case, it is applicable from the first reporting period. For example, if your financial year starts from June to May, then your first tax period will be from June 2023 till 31st May 2024. And if your financial year starts from Jan to December, then your first tax period will be from Jan 2024 till 31st December 2024. So from this period, you will have to comply with the transfer pricing provisions under corporate tax. And this question was like, what are the financial records has to be kept for corporate tax purpose? In this, we have two things. One for qualifying free zone person and for non-qualifying free zone person where the turnover exceeds AED 50 million. You have to maintain the audited financial statements as per law. For other companies, you have wages and proper document on wages, salaries, and your transfer pricing records, and everything others will be used for calculating taxable income. For unincorporated partnership, will the partners file corporate income tax separately as per the respective apportionment? Example, for a certain project in construction. In this case, the answer is yes, but they have to elect to file as a single taxable person for the partnership subject to certain conditions. And do we need to file only one return for all our branches? Yes. And UAE branches are not required to separately register or file. For all branches, you can do a single file return for corporate tax. As an unincorporated partnership is considered as single entity or individual taxpayer, is CT applicable for if the partnership is only based on a certain project, no trade license, not as a company? Each partner will be required to register for the UAE corporate tax purposes and comply with the requirements of the corporate tax law. And natural persons that are engaged in a business or a business activity through an unincorporated partnership are individually subject to UAE corporate tax on the share of income from the unincorporated partnership. And if this application is approved, the unincorporated partnership will file a CT return on behalf of the partners in the partnership.